across to Ashi Anand. Ashi, thanks so much for joining us on the show. Give us a sense of where, if at all, any strength you are seeing in the market right now. Because if I take a look at the week-to-date move of all of these indices, you have pharma that has ended in the positive. FMCG and IT have been losers. Nonetheless, they have been the least losing indices when you compare it with others like your metal, auto, realty. So these defensive, do you think there is still some support coming in from these defensives going ahead, and would these pockets, the likes of your FMCG, IT and pharma, would they provide some comfort to investors who are currently struggling with where to put their money amid a market that's falling?
So, firstly, thanks so much for having me on the show. If you just look at the market construct, you had, I think, just negative news hitting the markets one after the other. The last quarterly earnings was weak. GDP growth for the last quarter was also weak. And I think the Fed decision to kind of, not a decision, but an outlook to kind of slow in the pace of rate cuts over the coming year. All of these, there's really nothing very positive in the markets in the near term. There's obviously a very strong longer term construct. Now, the two ways to really look at kind of playing the markets at this point in time. In terms of the near term weakness, yes, we do believe that defensives such as pharma, IT, and consumer, these are all kind of sectors that haven't really performed over the last 2.5 years, especially if you go over the last couple of years. The markets have really been kind of boosted primarily by real estate, capital goods, defense, railways, a lot of capital formation related stocks. These stocks had possibly moved a bit ahead of fundamentals, and that's probably why you're seeing greater downsides there. We also see small caps as a space that clearly had a certain amount of froth. That's another space we are a bit concerned about. In the immediate near term, yes, some of these defensives could prove to be a place to kind of hide in terms of nearer term volatility. However, that said, the longer term outlook of both the Indian economy and the Indian markets looks very, very positive. We actually see this current kind of volatility as a chance for investors to not only increase overall equity exposures, but if some of these companies, if some of these sectors that were in very strong business momentum, if the stocks were to correct, valuations could become a lot more attractive. And we'd probably kind of look at kind of investing in some of these. Banking is a space that we think does offer a lot of kind of merit in terms of a combination of growth, quality, and value. So that is a kind of space that investors could also look at.